Alrighty, so this is going to be a bit of a short one, but I kind of just wanted to loosely, again, go through the charts, just kind of looking, at the idea of inducement and liquidity and how you can see how patterns can emerge that induce market participants, aka traders, to transact at certain levels, and then how that generates liquidity, and then how that liquidity can then be used. Okay, so it's going to be a bit of a slap and dash walkthrough. We're not trying to wrap our heads around exactly how we're going to mechanically trade this. That's what's going to come into, I think, the lesson after this one, where we'll kind of really lay down our systematic framework. But first, I kind of just want to go through and show you kind of a rough idea of what really happens every minute of every day the market is open. So, let's kind of just pick a point to start. Again, don't get too caught up in what the trade idea is or what structure is. This is particularly a range-bound and quite tricky market environment, but just kind of want to show you, what starts to happen. So even on just a very small scale, what do you have? Like, price is starting to pull back here, right? On a lower time frame, what do you think that double top is going to be? If you go down to like the 1 minute or the 5 minute, it's going to look like quite a nice resistance level. Price going to come down. People are going to want to short that. Looks like a strong level. What does it do? It induces buy side liquidity into the market, and then that liquidity gets used as potentially large BFIs have then used that buy side liquidity to enter their sell positions. Liquidity below that low, right? That low broke structure that induces market participants to generate sell side liquidity below that low, whether they're getting long, right, from that level. Remember, again, with their stop loss below the low, or whether they're selling the breakout of that low. Either way, it induces traders in there to generate sell side liquidity. Get a bit more relative equal lows here, right? And then you get the generation of that sell side liquidity that then gets swept to fuel the movement to the upside. We then end up having this big, massive, volatile flip where we react from demand, first put in a higher high, sweep the liquidity behind these highs, and then eventually get a move to the downside. And then this is where we've got some M15 POIs within the 4-hour POI. Again, not going to go too much into this at the moment, but essentially this was following on this demand chain. We had a nice zone that swept liquidity and moved to the upside, potentially some nice inducement at leg. Price pulled all the way down, didn't quite mitigate the zone. And then for a day or two, we started building this corrective move to the upside. Now, this entire time, this pullback here, what's it doing? It's generating a massive pool of sell side liquidity. So we initially have these relative equal lows here, right? Inducing buys into the market. I mean, even here, right, people selling this range, double tops, what's going to do? It's going to have buy side liquidity that then all gets tapped into and swept. Then we get a bounce off this level, starting to get those trend line traders, right? Or people just buying the break of demand. Either way, whatever way you want to view it, basically it's as simple as when you start to see a collection of orders in one level that price hasn't yet tapped into, we know there is sell side liquidity being generated below those levels. We eventually come up into this POI up here. And then we get that strong movement to the downside. And that's when all of that then liquidity can get targeted and we come down. Then we've got this demand level here. But again, what is it doing? It's just enticing more early buyers into the market, generating more sell side liquidity below this ascending trend line that then gets swept and induced into this original POI. So now you have all of this sell side liquidity that's built up. In theory, that BFIs can use to then buy against. And then you see that overwhelming imbalance between supply and demand as we start to move to the upside here, right? We flip supply there, we come up, and then we start to get this nice sort of ascending bullish order flow, right? So potential long opportunities within here. But as we know, what's it doing? All of these demand zones are getting mitigated, right? It's absorbing all of demand. It's starting to build a ton of that sell side liquidity below all of those lows. Okay, and then eventually when you get the mitigation of this level up here, when pricing comes down, all of the demand has been absorbed, there's a vacuum in price, and that's when you tend to see those aggressive movements as all of that internal range liquidity is taken. Even on a more granular level, it's just constantly happening in different amounts. What do we have? We have a pullback, that low breaks the high, induces potential buyers into the market, then the sell side liquidity gets generated below that low, and it acts as some nice inducement for this POI here, right? That liquidity gets used. Boom, then we enter to the high, liquidity to target all behind that descending trend line. People selling that on a lower time frame, right? They'll be seeing lower lows and lower highs on, say, the 1 minute, and then boom, all of that liquidity then gets used as inducement into this POI, where again we had inducement from that flip there. We know there'll be liquidity behind it, so now we have loads of inducement for this to then play out. and we move to the downside. You see how we leave those little perfect equals there as well, that then later gets swept for the buy side liquidity. So yeah, I know I'm kind of jumping through this very, very loosely, but that's kind of the point. We'll take this very, very slowly in the following lessons to show you kind of, how we're really going to read this. But you can just see it, right? We come down, we come up, we come down, straight push in the leg, right? There's no structural liquidity. So if you're looking at this POI, what does it do? Induces sellers into the market because the only available liquidity is then behind that high. That then gets swept and then moved to the downside. And that's it really. Like there's tons of examples, you can see here, right? Break of structure, there's your supply zone. There was no inducement in the leg, so we know it's pretty likely that the only available liquidity is going to be behind that high. So we get a bit of a move that induces more sellers into the market, doing what? Generating more buy-side liquidity, which then eventually you get swept. The swing high gets swept as well, that external range liquidity, and that's finally when there's enough buy-side liquidity for big enough players to potentially enter the market short to actually then get supply regaining in control. This whole time, what's happening? You're getting that support floor, generating tons of sell-side liquidity below that for price to target. This POI here, no inducement in the leg. There's no buy-side liquidity there for people to potentially sell into BFI. So what happens? We get a break of that low, right? Inducing sellers into the market here. So what does that do? It generates more buy-side liquidity behind the high for the big guys to potentially use to sell into, right? Same thing again here. Price comes down, pulls back, and there's no inducement in this leg. It's just one straight push. So there's no buy-side liquidity here for institutions to sell into. So that's an early warning sign this POI is going to fail, which is what ends up happening. You get a bit of a reaction. What does that do? That entices more early sellers into the market, generating even more liquidity now behind those equal highs. And now you have enough buy-side liquidity, again, for institutions to sell into. Rinse and repeat. Liquidity behind those highs come in. We get a reaction, right, from that POI. People looking to get short early, but it's not enough. More buy-side liquidity is generated, sweep that, and then we get the real movement. Again and again and again. Like anything like this, just be tons of sell-side liquidity then for price to target there to the downside. So, look, bit of a slapdash run and gun sort of walk through there. It's not supposed to be, anything that's systematic yet, but hopefully you can kind of just start to see how, people will be trading for many different reasons. Even if you just think purely about technical traders who are analyzing price charts and buying trend lines, trading supply and demand, trading support and resistance, whatever it may be, there's always reasons that liquidity will be building in the market. Now, there's some theories that these patterns are created on purpose, that BFIs, will deliberately, transact to create those double tops and double bottoms to entice even more participants into the market to then generate enough liquidity for the levels in which they truly want to get involved in. I don't necessarily buy into that so much or think about that too much, really. To me, it just makes sense that, when for whatever reason, this phenomenon occurs in the market where you see certain people transacting at a certain level, it makes sense, right? The more demand that is here, the more it's filled up, the more people that get involved, the weaker that level is going to become, right? Because the demand's absorbed, but the more sell-side liquidity that's going to build below those lows. And then eventually that's where price then rebalances price. And then you get the injection of demand with the big players using all that sell-side liquidity to enter the market. So it happens on the bigger scales like this. It happens on the smaller scales like here, right? Straight push. So what do we need? We need some inducement. There you've got a low. And now you have some sell-side liquidity for potential BFIs to buy against, right? It's going on every time frame at every price level. It's just orders going through the market. But yeah, hopefully now in the next lessons onwards, we'll start to dive into kind of the systematic way in which we can approach this, the entry models that we can look for, and hopefully it will start to make a bit more sense on how we can really make some money from this.